Hello. Thank you. I appreciate the opportunity to come and speak to you all. Before I actually get started on our topic related to Cushing and the logistics and what it's doing to the oil market, just a reminder that anything that I might say related to forward-looking events, things that might happen in the future, those are my opinion and not any position Genscape has. Do not rely on them because they're probably not going to come true. But they are things that I see in the market that kind of give us evidence. You know, Cushing has been a really, really interesting topic and an exciting topic for the last few months, even to the point where I'm used to talking to people in the press from Argus, like you, Bloomberg, Platts, Reuters, people who understand our markets. But over the past several months, we've also been fielding a great deal of calls from people like the Wall Street Journal, USA Today, and National Public Radio, because Cushing has been having an impact on what's going on in everyday people's lives through the cost of crude oil flowing through to refined products. We've seen this glut of supply of crude oil on the world market. We see that not only in the U.S., but we see it as evidenced by the West African and the North Sea and the Persian Gulf cargoes that haven't been able to find a home, or at least found difficulty finding a home. North American production has outstripped almost even the most optimistic forecasts that have ever been out there. So in the latter part of 2014, we saw crude prices fall dramatically, and we saw the market go into a contango. And once we hit storage contango numbers, we really started to see storage at Cushing build, and that's kind of what we're going to talk about, is the impact of that build and what's allowed it to happen. So if you go back to when Genscape first started monitoring crude oil in 2009, there were approximately 50,000 barrels of storage. And it was around that same time that the shale boom, as they call it, the tight oil plays, the Bakken field, the Rockies drilling, all of that. And we saw inventory at that time actually reach 38 million barrels at Cushing, which represented about a 75% utilization. People started realizing that there's a lot of production, we needed more storage, and there was a concerted effort by all parties to start building additional storage at Cushing, Oklahoma. We can all remember the WTI Brent blowing out to over a $28 spread. That was because there were logistics in place that were trapping crude in the Midwest. There just wasn't enough capacity. You could not get it out. So we saw the contango structure of WTI at that point go down below $14, and we saw several dips below $10. It's easy to store crude and make money when you have contangos that large, but that was caused by a logistical difficulty. It was not the economics encouraging a build of crude oil. It was trapped crude building, forcing you back into a contango market. So we started building crude. By the end of 2011, we had gone from 50 to 54 million barrels of capacity. We've seen now another 35 million barrels of storage constructed at Cushing, Oklahoma since we first started monitoring. If you look at what is currently under construction and those tanks that we expect to come out of maintenance, by the end of 2016, we think there's going to be well over 86 million barrels of storage capacity just at Cushing, Oklahoma. So if you want to know who's building, which actually does have implications to the market, 12 of the 15 terminal owners at Cushing have added capacity since we've started monitoring them. Plains All American has certainly led the way with over 9 million barrels of new storage construction. And if you look at it and you wonder, what is the configuration of this structure? What is it made to hold? Because if you look at it from a standpoint of what's related to the WTI contract on the NYMEX, you want to know how much of this storage can handle domestic suite or crudes that can be delivered into domestic suite. For instance, we've seen about 3 million barrels of storage completed by TransCanada, with more on the way, but that storage was built primarily to support the Keystone South leg, the Market Link leg from Cushing to Nederland. And we think that storage is there primarily to support the movement of Canadian heavy crudes. That actually has been evidenced, as we'll see later on. But some of the other ones, the midstream players, Plains All American, Enbridge, Blue Knight, those constructions have primarily been merchant storage. It's available for anybody to lease and put crude into. So if you look at what has happened with storage, and Enbridge, although it was kind of the same intent as the TransCanada, it reached almost 90% of capacity. That was primarily due to the clause within the Flanagan South pipeline that allowed people to store barrels for up to 6 months. But everyone has been storing and building additional storage, midstream, merchant traders, and refinery operations. Of those 12 that have built storage, 7 of them have built over 2 million barrels of additional storage, with most building 4 and above. Now, these are the big midstream companies who lease storage, who gather barrels. They're the people who keep that whole engine of Cushing going and who allow Cushing to be the location for delivery of the NYMEX contract. So it's the midstream players who built most of the storage, which means most of that has been available for people to come in, lease a tank, lease space within a tank, put barrels into storage, hedge it with the NYMEX contract, and have what is very close to a free arbitrage at Cushing, Oklahoma. So let's take a look at Cushing in a little bit of history, because if you don't look at history and how storage and how logistics have affected the marketplace, as well as when are other factors driving something that looks similar, then you can get in trouble, because you can assume that something's happening today that happened 3 years ago when really they're very different factors. So let's go back to when Genscape first started monitoring the storage at Cushing on a biweekly basis. And you'll see that back in 2009, we saw crude build up to almost a 75% utilization. At that time, we were hitting all-time highs, but we were building barrels. There still was not enough capacity to store the crude or to pass it through Cushing and get it to the refinery centers in time, so you had these trapped barrels. This was what created the crude by rail movement, and now we have seen as much as 1 million barrels a day of crude being moved by rail in the continental U.S. 2011, we saw a short-term drop, but it did not last very long, and we continued to rapidly build inventory in 2012. This again was the problems of logistics. We did not have enough pipeline. We did not have enough rail to move the crude out of the production areas. So we saw that rail alone could not solve our logistical problems. So in 2013, we saw the reversal of the Seaway and then the expansion of the Seaway pipeline, which added 400,000 barrels of capacity to remove crude from Cushing and take it south to the U.S. Gulf Coast. That was the trigger that allowed the market to move from a contango into a backwardated market, and we started to really see Cushing draw. So let's take a quick look at that, and then we'll come back to this slide. You can see it was right around the June-July period that we saw prices flip from a backwardated market where they reached high, the early contango markets of 2009, 10, and 11. And in 13, around June, July, we crossed the midpoint and we went into a contango market, and we went into that backwardated market very steeply. We saw backwardation reach the point where it was actually at $14 a barrel, which is one of the largest backwardations we've ever seen on the 12-month spread. Now, that 12-month spread is important to look at because a lot of times the lease on storage is for 12 months or 18 months, so the hedge that has to be put on has to be that far out. So unless you're storing on a month-by-month and planning on rolling those hedges, any kind of a long-term play, you're looking at what the long-term structure is really looking like. So we've seen this go out to $14, and the crude just came pouring out of Cushing, Oklahoma. We watched it come out at a pace of sometimes 2.5 million barrels a week. Now, the market really paid attention to that. As soon as we saw significant draws, that's what helped push that market back up into the backwardation that we were seeing, and we see the crude start coming out. Now let's go back and look at our history of Cushing, and we notice that that fall pretty much lasted from June with a short interruption as we built during some turnarounds, all the way down into the third and the beginning of the fourth quarter of last year. And then in November, things started to level out, and we started to see builds in Cushing again. But it's important to recognize that this time it was different. But look what we did from November of 2014. For the next 6 months, we put in over 2 million barrels of storage almost every single week. We built to all-time highs. We saw crude levels reach 67 million barrels of storage. We saw utilization capacity reach over 78%. And we think that that 78 to 80%, that is operating capacity for Cushing. You can't go higher than that. You've got barrels there that are used for refinery supply, as well as the tankage that's used for blending. And 80%, if you get there, there's no way we believe that you can go higher than that. So we pretty much had reached the operational capacity at Cushing. And in doing that, the question is, where's the crude go next? Now, if we go back to looking at our price history again, we see that as we filled Cushing up, demand started to pick up, and the refiners geared up for driving season. The contango weakened, and now we are at the point where there are no new storage economics. We're still in contango. There's no motivation to pull crude out of Cushing right now on a wholesale basis. But as those contracts expire, people are probably not going to roll hedges out and extend those storage contracts. It just, the finances aren't there to store more barrels for an additional period of time, but there's no motive to bring them out either. So I think that Cushing, until we see us get into backwardation or closer to it, or until the U.S. Gulf Coast, the demand for crude down there drives the price up high enough that bringing crude out of Cushing and selling it on the Gulf Coast and paying for all the transportation to get east of Houston, which is not just the pipeline down to Nederland or the pipeline down to Freeport. You have to get on either the Ho-Ho pipeline or you have to put it on water on Jones Act vessels to try and move it further east. So Cushing to the market to compete against the LL market is a lot more expensive than just the pipeline south, and you have to take that into consideration. But I think we're at a balance point for a while. So until we see the global crude glut ease a little bit and the prices actually move into a backwardated market where people can take cash out of the market by putting Cushing barrels on the market, I think we'll see a little draw, a little build, a little draw, a little build, and Cushing will kind of stay balanced for a little while. But let's look again at exactly where is this storage at. And almost everybody is still over 50% utilization. The midstream players, for the most part, are still over 70%, with some still over 80% of their utilization. And remember, it's the large midstream people who are holding the barrels that can be delivered against the contract. So the whole economics of, is there room? Can you store sweet barrels? Are you still able to hedge them and roll them? Those are the things that will be dictating how long Cushing stays full and when it gets drained. And that's important to understand. Knowing how much space we have available in Cushing to put additional barrels is something that is going to be critical for everybody to look at, because I want you to see where we just might be headed with Cushing. Remember, the contango market we've been in and the build we've created, it happened because of economic incentive. This build of inventory was much more like the build we saw in the late 1990s when there was a global glut of crude, and it was the contango market. It was the economics that encouraged people to put barrels into storage because there was a good free arbitrage out there to do that. In 2008, 9, 10, those builds were driven because of economic constraints. And then the build we've seen over the last 6 months, those have been economically driven again. But if we look at Cushing, Oklahoma, and we all know about the development and now able to move barrels south, but a lot of people haven't paid enough attention to realize that in the last year and a half, we've added 1.5 million barrels a day of inflow capacity to Cushing. This has been the addition or the expansion of Midwest pipelines like White Cliff, Pony Express, Mississippian Line, and the Glass Mountain. And then the largest piece was the addition of Flanagan South, which provides up to 600,000 barrels a day of crude capacity. Now, right now we see Flanagan South running at someplace around 2/3 full. And the other Midwest barrels that we've seen out of the Rockies and the Bakken, they've been running probably closer to 3/4 full. So they haven't completely filled up. But when they fill up and you look at the outbound capacity, we now have a problem of more incoming capacity to the tune of about 500,000 barrels a day more than we can take away out of Cushing. The other thing that you'll notice is most of these new pipelines, where do they terminate? They terminate in the big midstream players, and those are the people who currently are above 70% capacity. So should we see prices rebound and we see production of crude start to grow again, especially in North America, then we could find ourselves back in the same type of position we saw in 2009, where we have more production and more crude flowing in to Cushing, Oklahoma, than we have the ability to take away. Now we have a build in Cushing that once again is driven by logistics, and you have the possibility of seeing the WTI market and the Brent market disconnect once again. So we just finished kind of repeating the late 1990 period, and we've got this huge hangover of crude, not only at Cushing, but we've got the highest inventories we've ever seen in the U.S. There's not a problem with space. We're not about run out because we built storage not only at Cushing, but on the Gulf Coast, we're looking at over 60 million barrels of free capacity. So we're not panicked about we don't have any room for crude, but we still have a lot of storage that's been built that would have to be run off before the real market bull could run up. But when we get there and we start producing in the Midwest again, we need to watch and see what is available at Cushing. Do you have room? Because there's not enough takeaway capacity right now. We did build if you look at the flows coming into Cushing, you can even see that demonstrated over this period where we have built storage at Cushing. If you go back just 2 years, those pipeline inflows to Cushing were less than 1 million barrels a day. Recently, we've been running up to 2 million barrels a day into Cushing, and that's backed off a little bit just in the last few weeks, but the capacity's there, and when the production is there, we'll see flows into Cushing go above 2 million barrels a day. Now, the outbound pipelines, we've seen a build there too. So if you go back to 2011, we were at about 1 million barrels of takeaway capacity. We have since added the Seaway pipeline in 2012. 2013, we expanded that pipeline to 400,000 barrels. TransCanada came on with the line to Nederland, and then Seaway was twinned. So we've added 1.6 million barrels of takeaway capacity, but at the same time, as we looked at just a moment ago, we started adding the increase. So we still have an imbalance in the total throughput of Cushing of incoming pipes and outgoing pipes. Now, the other thing that is worth noting is, in effect, we have lost capacity because of the utilization of BP1. With the reconfiguration of the Whiting pipeline, they are now taking a lot more heavy Canadian crude across Lakehead coming down the Enbridges lines, and they're not taking as much crude from the Midwest, the lighter, sweeter crudes. So we've seen the BP1 pipeline go from utilization in 2013 averaging 120,000 barrels a day to, at this point in 2015, it's been averaging about 30,000 barrels a day. So you've lost almost 540,000 barrels a week of takeaway capacity because of an underutilized pipeline. And the economics incentive for BP at Whiting are to run the heavy crude since the reconfiguration of that refinery. So in addition to that 500,000 imbalance, let's put another 90,000 on there and say that that is the loss of takeaway capacity too. So currently, we're not in a terribly bad situation. The flows to Houston and the flows to Nederland are certainly capacity down those two lines are enough to handle additional crude oil. You can see how much goes to Nederland since we brought the Keystone line, how much is going to Freeport through the Seaway lines. And if you look at that total flows versus the blue line, which is the total throughput capacity of those three pipelines, you'll see that even now we have enough space. We have almost 400,000 to 500,000 barrels of spare capacity given the flows into Cushing right now. The problem is if you fill it up, you're going to be filling up significantly more than that. So we need to watch Cushing. We need to watch the pipelines and constructions around the pipelines to try and help determine, are we going to be able to handle the throughput to Cushing, or are we going to get into a constrained market again? Now, as I mentioned earlier, the outright storage is not a problem. We still have more than significant storage to be able to fill up tanks at the Gulf. So nobody needs to panic about storage. But the question and the key is going to be Cushing, the pipelines through Cushing, they're tied to the NYMEX contract, and how those flow south. Now, a lot of people have talked about the possibility of reversing Capline. The problem with reversing Capline is once you do that, you only have 1 million barrels of capacity coming into Patoka, and you have 2.5 million barrels of capacity going out. So between that and BP having economic incentive not to reverse that pipeline, then there's a really good chance that that is going to be a difficult reversal and nothing that will happen in the short term. So we do have this potential 500,000 barrel constraint, and we could see a repeat of the 2009, 2010 years where we can't get the crude being produced going out once prices return and drilling returns. So be glad to take any questions, and I appreciate the time.